All right, peace, power, and profit, everyone. This is Wall Street Logic on the behalf of Croft Services. All right, man. So I want to get into a few things concerning the financial markets and economics. But I want to deal with two things. Two things first. Um, a couple articles and some news that's came across the last few days that I want to discuss. One is Nike, um, and one is Peloton. So Nike, I'm making this part of the video because I am going to clip it after everything is said and done. I'm going to clip it because this also goes into the sneaker side um, of the market and the business. So I want to discuss, uh, you know, some stocks and the economy and some financial things that's going on right now that I want to deal with, and we can talk about some some plays for next week to make some money. We know the market is closed on Monday tomorrow because of Memorial Day, but and we can talk about some options and look at some stocks that we could potentially trade or invest in. But I want to deal with this first. So Nike uh, is having some big issues right now. They are having some big issues. For one, on their earnings call, when they have earnings every what is it, every 3 months, every quarter, they always talk about product innovation, and they say this so much, and I'm like, where's the innovation at? It's 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 not been a bunch of innovation over at Nike. Um, Here is why. One, because their design team is trash. A lot of the people that they had before, like around the pandemic, has left. So I mean, I'm not gonna say it's super bad, but it's not super good either. It can be looked at as bad, which is why they're suffering. Their company is suffering, and the share price has decreased in the last couple weeks, like by $16, something crazy. What's up, Mo? We going live later, Mo. Whenever you get time, we going live. But right now, I'm gonna do this on my channel. Um, I just want to point this out right here. So this article that I came across on Business Insider, bars, straight bars on why Nike is not growing, man, and it's not this product innovation stuff they like to say. They have not been capitalizing on that. So it's just been a bunch of filler and a bunch of nonsense that they telling shareholders and consumers that to try to keep them coming, basically. Now, I'm not gonna lie, you know, on the sneaker side, the consumer side, there is a lot of things that they're doing. I know with Jordan brand that is gonna have the people's interest. But you gotta think about the runners, you gotta think about the women and other athletes, that like, Nike Air Maxes, Nike trainers, Nike running, and all these other different divisions of their company that they have to cater to. So this is where they're failing. They have no product innovation and no diversity and creativity in these certain areas. So I'm going to read this article, right? And I want y'all to peep the game, right? Peep the game. Now, a few weeks ago, Nike was like around 127, 123, floating back and forth in share price to when I just seen it yesterday or Friday, I should say, where it was like 106. So it dropped dramatically. And that also goes into Foot Locker as well, because Foot Locker just had earnings like a week and a half ago. And they were bad. They're closing stores. I'm gonna get into that. I'm gonna get into that. But you know, right now, let's deal with this article. So this is Business Insider, and the title says Nike is shuffling executives and searching for its next breakthrough innovation in quotation marks as unwanted Air Maxes and Air Jordans pile up. Okay, man. So yes, shoes are piling up. They're still in stores. They're going on sale. Uh, they're sitting. What we like to say in the sneaker culture, shoes are sitting. Now, that's not every shoe. That's not every shoe. Some shoes are. A lot of shoes are. A lot of Jordan retros are not sitting. Some of them are. Yep, they got to drop the prices, but they can't afford to do that because inflation is still high and you still have to pay, for transportation. So they can't afford to drop the prices on retros. Even though when they sit for so long, you have to discount them. Like, okay, so this side of the business is where a lot of sneakerheads don't know anything about. Some of them may do, but let's go into detail on the business side of, you know, Nike, Foot Locker, and all of these other retailers. So, yes, you will have some retailers discounting these shoes because they don't have a lot of demand. Uh, the demand for them is not that high, especially with these increased prices. Now they went from, I think all the retros went up like $10. That's a lot of money. That's a lot of money, especially on a shoe that a lot of people don't want. So this goes into that, product innovation, so to speak, and creativity, right? So when you have for instance, a retro Jordan that, used to be 190, used to be 180, used to be 170, used to be 160. Now you're charging 200, 210, 225, and then it's in a economic environment where you have high inflation and then you have high debt and then you have high interest rates on that debt. So companies can't afford to cut prices on goods and services because their revenue is already taking a hit. Their profits are already taking a hit. So they can't afford to, you know, cut prices. They have to keep prices and have to cut employees, layoffs for capital preservation so they can save money. So they're not going to cut prices because they do care about the consumer, but not that much. Not to where, they already got to suffer for the prices they have to pay and the prices they have to pay on their debt as well with the high interest rates. So, it's feasible for them to cut people instead of cutting prices on products and services. So, a lot of these shoes are stacking up because one, layoffs, two, PPP money, stimulus money, unemployment, uh not unemployment benefits, but the extra unemployment benefits that we got in COVID a couple years ago, long gone and done. That money is not there to spend more now. So you have an issue where, you know, not just that the consumer don't want the product, the consumer can't afford to buy shoes every time it drops. So you're releasing shoes every week, sometimes 2, 3, 4 days a week for these products. Nobody can keep up with that. And you raise the prices on the products and the prices people have to pay with whether it's credit cards or the interest rate on their homes or mortgage rates, all of that, coincides with, their day-to-day life with rising prices on food, clothing, and shelter. You can't expect people to keep up with those prices. for a long period of time. Because now, even though you still got people spending, that's why you got issues with buy now, pay later, because people are using that for yep, employee retention credit gone. Yep. Uh, People are using buy now, pay later for groceries and all kind of other stuff. So that lets you know people are strapped, and they are still consuming highly, but they don't actually have the money to pay for these things right then and there. They have to use a buy now, pay later program to get the product and service they want, so they don't have to spend everything up front because they don't have the money. So this ties into Nike's issue right here. So on the sneakerhead side, resellers, resellers are not making as much money because a lot of these shoes don't have a demand. They don't have a high market price value after the shoe releases at a retail value. So Jordan 1 Retro, $180 at retail. Now, during the pandemic, that shoe would probably sell for $300. So a reseller could make money. So they could buy up more shoes, and these shoes would sell out, and they won't re-release for a long time or restock for a long time. So a reseller would make a killing. I was one of those people, but good thing that's not my only income. However, so now you have a lot of these shoes that are releasing. They are sitting in stores. They're sitting online. They're widely available. Resellers aren't making as much money as they used to. Even the ones that, do this for a living, they're not making as much money as they used to. And I would tell them, prove us wrong. Show us the receipts that you are making six figures like you was in 2020, 2021, 2022, 2023. You're not doing that. That's an absolute fact. I guarantee you're not. So even if you got the clientele, because that shoe is not high in demand in the first place, and being uh it's not being picked up by the consumer unless it's like a Jordan 1 Chicago. It's got to be a specific shoe, and people can't afford that. They can't afford those reselling prices. And if you go to the marketplaces or the middlemen and you find out, what shoe has resale value, and you look up the resale value on that shoe, a lot of times the shoes are going less on the market than it is at retail. So you can actually buy from the middleman on a marketplace cheaper than you would buying it from Nike itself. That is an issue. So, uh, enough of the commentary. Let's go through this article, man. Let's go through this article. So again, Nike is shuffling executives and searching for its next breakthrough innovation as unwanted Air Maxes and Air Jordans pile up. Unwanted. That means the people don't want these or can't afford to get these, so they have to mark them down in price. And Nike is very iffy about that. So when they restock, uh, I'm on Twitter a lot. So there's Twitter services and people on Twitter that, post links for shoes that restock. And a lot of times, Jordans are not discounted. Sometimes they are. Sometimes they are. But a lot of times, no, they still want that retail price. And when they restock, they're still sitting because nobody wants to pay 180 for a shoe that's going less than retail on the resale market. And not only that, the what was I gonna say? They're restocking this shoe, expecting you to buy it. Now you do have the option to use a buy now and pay later service, which some people are doing. So you have Klarna, you have Afterpay, and you have Affirm, and other smaller companies that's out here that has a buy now pay later system. Now, even still, Some of these shoes people just don't want. The colorway is whack, it's trash. And for the simple fact, they can go to StockX, GOAT, or eBay, or even Facebook Marketplace and get the shoe cheaper. They don't even need Nike for that, which is an issue. All right, so going through the article, it says bullet points. Nike this week announced a slew of executive moves, including new presidents. Damn, it's getting bad over there at Nike. It's getting bad in Nike. They moving the executives and new presidents and all of this other stuff. The company wants to develop the next breakthrough innovation. Now we hear this. If you're on an earnings call, you hear this innovation talk all the time. The management shuffle comes as analysts question Nike's stale product lineup, which means it's trash. It's trash. A lot of the products they coming out with trash. Not just sneakerheads, but athletes, runners, whatever. People ain't liking it. It's garbage. That's why a lot of these shoes are stacking up. All right, so going forward, Nike this week announced a series of executive changes designed to underscore the company's commitment to product innovation, just as more analysts start to question the company's stale product lineup. Once coveted Air Jordans and Air Maxes are now sitting on shelves, with some retro Jordans selling below retail on the secondary market. This is a fact. I can go right now and pull up screenshots of a retro that is going for less than retail on the secondary market. So marketplaces like StockX, GOAT, eBay, so forth and so on, where you can purchase the shoe, get it authenticated, and it's gonna be cheaper after all of those services and fees than what Nike's selling it for on its website or in store. So, but that's not every retro. It's only the retros that people do not like. So don't think you can go and get, a Travis Scott or Jordan with Chicago or, a Jordan 4 Thunder for cheaper than retail. Not happening. It's specific. So it says Air Max is becoming Air Men. That's funny. Air Max is becoming Air Men, reads the headline of a report this week from Williams trading analyst Sam Poser, who downgraded Nike stock to sell. Now, that's important. Now, I didn't know this. This is why Nike went from like 120 something down to like 106, 107 a share. And it's because it's being downgraded to sell because it's not performing. It's not, up to standard with product innovation. There's too many shoes sitting on shelves and, it's different retailers, stores and websites. All right, going forward. On Wednesday, Nike announced a series of executive moves and touted the shuffle as a way to supercharge product development. In the roughly 500-word press release, Nike used the word innovation 4 times. They use this word innovation every earnings call, man. They use this innovation word every earnings call. And where is it? Where is the innovation? Bring us, the innovation. This is why you got a lot of, garbage and trash shoes sitting because nobody wants them. And, other economic and financial factors. Yes, Mo. Yeah, we could have made some money on Nike if I was paying attention, but I was not paying attention. So, that's our fault. All right, so going on in quotation marks, these shifts will allow us to streamline our focus across product, brand storytelling, shit they say in every earnings meeting, and marketplace, mining deep consumer insights to deliver breakthrough innovation and engagement while building long-term growth and profitability, CEO John Donahue said in a press release. Well, John Donahue sucks when it comes to this. So I would rather somebody take over as CEO, somebody new, take over as CEO, and really drive Nike to where it should really be, which is a standard. All right. So reading on. While numerous analysts remain bullish on Nike, Poser is among those who say Nike needs to ramp up innovation. I agree with Poser. There is not enough compelling new product offerings, and the old product has become stale. Agreed, Poser wrote, pointing to Air Max running shoes and family footwear as examples. There is no newness coming out of Nike, said industry analyst and Arch USA founder Chris Burns, who recently wrote about peak Nike. Yes, I agree as well. After 2 years of heavy retro buying, many consumers also have filled their closets with Jordans, Dunks, and Blazers. They don't need another pair. Yeah, I kind of agree with that. In a separate recent research report, Burns noted searches on eBay for Air Jordan and men's sneakers dropped from 28 million to 18 million between March 22 and March 2023. March 2022 and March 2023. That's a lot. That's a lot. That's very important. That is very important. That should be highlighted by sneakerheads and for investors like myself. When you drop 10 million in a year in searches, we got to pay attention. We really got to pay attention. Also goes on to say in his report, Poser noted a number of premium Nike sneakers are on sale for less than $100, including the Pegasus, LeBron 9 Lows, Luca Ones, Metcon, Space Hippie, Blazer, some Air Force Ones, and Air Max 90s, 95s, and 270s. That's crazy. That's crazy. That's crazy. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 10 different silhouettes. Nike silhouettes that are on sale. 11 if you count retros. You got 11 different Nike shoes that are on sale. I think that's the most I've ever known in this recent history. Because, like I said, the pandemic was like the plug or the plunge to the pipe full of crap. So now everything is blowing up in our faces. It's exploding. All of this, fake uh product innovation is being exposed now. And here's some more key news. It goes on to say some recent retro Jordans have sold for less than retail on StockX. I just said that. Poser noted, including the Jordan 5 Retro SE Craft Light Orwood Brown, which is this shoe right here. This shoe. This is what they're talking about. This shoe right here. This shoe was retailed at $210 since it's a special edition shoe. This shoe right here. This is the shoe they're talking about in the article. The Orwood Brown Jordan 5 SE Craft. It retailed at $210. But, well, I bought it for less, of course, because I know how to, use my reward points, use my little discounts with my retailers to get the shoe. But I think, let me look. Let me look and see what it is on StockX. The last time I looked, it was way below retail. Let's look at it. Jordan 5 Craft. Look, if y'all can see that, what they say. Lowest ask 176, highest bid 165. So what that means is the lowest ask, that's how much you will have to spend That's without taxes and fees and all that other stuff, which is $176. And the highest bid, as you as a seller, this is your payout before taxes and fees, which is $165. That is $45 cheaper than what the retail price is. So if you wanted to sell a shoe, you will only get $165 back without the taxes and fees. After that, it might be like one. Let's see, we can find out because it does depend on the size. It does depend on the size. And since I'm a size 12, right? Size 12, right? If y'all can see that, says sell now 165, right? Well, let's see the total payout. Total payout is 139.55. That's crazy for a size 12 that costs $210 from Nike and there's other retailers. As a retailer, would you sell that shoe? No, you have to keep it. You're gonna lose 70 something dollars, $70 per shoe trying to sell that shoe. You're gonna lose $70. And if the buyer is smart enough, they know they can just buy it, off StockX for, okay, let's see, if you wanted to buy it, right? This is if you wanted to buy the shoe, right? 176. Okay, let's see. Review order, because you got the taxes and fees. Taxes and fees, you pay $213.37. After tax at Nike and its retailer, it's like $227. So, that's crazy. That's crazy. Why do you need Nike if you got the middleman service giving it to you for cheaper? And you still have to deal with issues like, making sure the shoe is real, which they provide authentication services. But it's been kind of janky, with some of these middleman services with, people selling fakes, letting fakes go through, so forth and so on. But for a shoe like this, you won't have to worry about that. But like I said, you're getting a shoe cheaper from here than you would from Nike itself. So why would you shop at Nike if you can get the shoe cheaper, on a secondary market or the resale market? That's exactly what he's talking about right here in this article. And we just seen the price. Now I paid $177 for my shoe. I had a gift card, $50 gift card, got them for essentially $160 plus tax, $177. So way under retail, because over here, we shop smart. We shop smart. We use all our resources, our information to get the best price possible, even when we're consuming. We do the same with, trading stocks and buying stocks. Same thing. And selling stocks. So let me read on. While the lifestyle sneaker business is losing steam, reselling market, the performance sneaker business, a historical Nike strength, is humming. It's humming. But here, Nike is facing increased competition. Oh yes, it's some competition now. It's some competition. It may not be coming from Adidas or any other of those other big sneaker brands, Adidas, Under Armour, so forth and so on. Now you got like Puma and New Balance and Hoka. Here we go. Hoka on Thursday reported a 40% increase in quarterly sales. Now, shout out to brother who Mo calls Coach Garrett Murray. Shout out to that brother because he actually, introduced me to Hoka, and I started looking into it. I haven't purchased any shoes yet, but I am. I am. I got a couple pair on my radar that I am going to pick up because I'm going to make sure my sneaker portfolio, my sneaker collection is very diversified. So it's not just going to be retro Jordans and those things. But Hoka on Thursday reported a 40% increase in quarterly sales. Also, Morel sales increased 27%. Now, I've never heard of that company. Now I'm going to have to, search that up. So, Mo, if you want to do a show later, let's go and find these other sneaker uh, retailers, that, is doing better than Nike is. So, Hoka had a 40% increase in quarterly sales. Morel had a 27% increase in sales. Yes, we could have gotten paid. Now, I don't know if they're publicly traded or not. That's something we have to look into. I'm definitely going to look into it for sure. On running sales, climbed 55% to more than 1 billion last year. That's crazy. That's crazy. That's crazy. Sleeper companies. All right. In quotation, anything that is that sort of wellness influence is what has been moving. So that's a wave. That's a wave that we need to pay attention to as investors. Um, I don't know. I mean, people's personal preference when it comes to sneakers, whatever they use their shoes for, whether it's casually, sports, running, whatever, that's you. But on as an investor, you know, we have to look into this market and see the opportunities there, because Nike is not the only brand that provides this this type of product, and it's important to know, to be diversified and to not just go with the big name brand all the time, because big name brands comes with a lot of scrutiny, though they have more to fall back on when it comes to scrutiny and things like that. um, you can make money everywhere with anybody. It's all about time, place, and those calculative things. So yeah, see. Oh, what's up, Andre? Okay, Morel does all terrain shoes. Cool. Glad you said that because now I had to look into that. I need to look into that. Um, Not just as a person who likes shoes, but as a investor, because you go where the money is being made. This article clearly said that their sales increased 27%, and that's something you want to look into. Definitely going to look into that. Of course, we need to see some charts, some data, statistics, and things like that, and go from there. All right, so moving forward, it says anything that is in quotation marks, anything that is that sort of wellness influence is what has been moving. This is Jessica Ramirez, senior research analyst at Jane Halley and Associates, told Insider, "We've seen lifestyle sneakers really take a bit of a setback." There you go. So wellness sneakers, have been increasing. Lifestyle sneakers haven't. That's not a coincidence. Now, what's important in these articles are the people and the companies or the hedge funds or whatever company is that they work for. It's also good to look them up, see how credible they are, and just find out, do some research, find some information about them and whatnot. Young folk don't have no money. For sure. All right. So reading on, consumers often prioritize multi-use items. That's true. Like performance and hiking shoes during uncertain economic and inflationary periods. Very important. That's a very good point. Ramirez said they want footwear that can be worn for workouts as well as in the office and while running errands, which is which brings everything full circle. Brother Coach Murray, I appreciate you, brother, because I never heard of Hoka before you introduced it. I may have seen it somewhere online, but didn't pay any attention to it. This is a good point as a investor. Even if you don't care about shoes, or you just really a stickler for a certain brand, it doesn't hurt to research other brands. And they may be cheaper or they may be just as expensive. But what matters is the diversity and the quality. And Nike been selling us, product innovation for a long time, and they're not really keeping up the pace with that. They're not delivering on that, I should say, and it's showing. And they've been exposed. They've been exposed. All right. So she goes on to say, when you move to running, hiking, and anything that is outdoor related, those sneakers are not being put on promotion, and they are holding up their prices. She told Insider. Good point. Nike's been in this position before. Their current activity is early. Oh, hold on. My bad. Their current activity is eerily familiar to 2015 and 2016 when Nike stretched the Jordan brand to near oversaturation in order to offset lack of newness in other categories, Poser wrote. Now, Nike is doing that now. They're oversaturating the market with uh retro ones, retro twos, and I get it. They're trying to be more creative with these old silhouettes, but historically, people don't really like retro twos, and the retro one is being so watered down, like it's just too much. Like back in the day when I was growing up and retros used to come out, that's because Jordan was actually playing at the time. You know, there was long periods of time before we got a retro release. So whatever shoe Jordan was wearing, you know, that shoe would come out once and you probably wouldn't see it again for a while. I think Nike has to go back to that. You got to give us the bread 11s. You got to give us the taxi 12s, but you got to spread it out. You can't have, like recently, you can't have 2 and 3 retros dropping in the same week. That's just too much, especially in this time. High inflation, stagflation time frame, where it's economic issues all over the place. And then you increase the prices on retros. This is not fundamentally good to make money. It's just, I get it. You got to cover your costs on the business side. However, the consumer is only going to be or only going to pick, what they can afford, what they can grab, and what they like. And if it's something they don't like a lot of these trash colorways that they come out with, that shoe is going to sit, and you're going to have to discount that regardless because it's just going to be sitting there unless somebody really desperate and just want this shoe. 9 times out of 10, it's just going to be there, and this is why they are having problems with their sales. They're oversaturating retros. We do not need 40, 50 to 100 retro ones a year. We don't. And then a lot of the times the colorways suck. So that goes back to the designers and the people that are on the team. Got to do something else. It's not working. Okay, yeah, Hoka is big in the UK and Europe. Your wife's where they yeah, for sure, for sure. And I've learned that. I've learned that. And that's good to know. That's good information. But Nike has to is really oversaturating the market. The Retro One Chicago, best shoe sneaker of the year last year. They re-released this year. The app was trash on sneakers. That was horrible. To even where the Nike CEO had not CEO, but the president of the sneakers app division had to come out and say, we totally fumbled the bag on that. And then JD Sports Finish Line, they released only grade school pairs. That's an iconic shoe. That's an iconic retro. That's the shoe that you want to re-release as much as possible to your consumer. Now I get it. You're not going to make a billion pairs, you know, for people to get. I get that. However, your releases are trash. How you release the shoes, the problem with the apps, things like that, is just garbage. This bot control, it's just so much, I can go to on that side. However, you know, the product innovation is nowhere to be seen with Nike, and they need to stop putting out trash shoes that people are not gonna want. Trying to be creative, and that's not working because the people don't like that, and that's why they go on sale. One, they overpriced, and two, they're gonna go on sale because people don't like them. And then not only that, they don't have the money. That's three issues you got. Three. So, you got to do something else. All right. So, going back at its 2017 Investor Day, Nike announced the Air Max 270. Other next generation products followed, including the Vaporfly, which helped Nike get back in front of consumers. Yes, but you have to continue that trend. You know, you can re-release different colorways. That's fine. But you got the numbers, you got the data, you got the statistics on it, and you have to cater to what the people like and what sells. And that's the problem Nike is having. All right, so going on. But one lingering question for Poser and Burns is whether Nike's still got product development muscle it needs, which they don't. Nike has lost many senior people throughout their entire company with now necessary historical institutional knowledge of Nike, Poser wrote. As such, Nike's game today is not as good as it was 5 years ago, and that's a fact. That's the problem. A 2020 round of layoffs whittled away at the company's footwear ranks. Others left voluntarily, with one former Nike footwear designer last year telling Insider the talent drain will show up on store shelves this year. He prophesied right and correctly. You'll definitely see it next year in spring and summer 23, the former designer told Insider. And we are seeing it now. The proof is in the pudding. The facts are on the table. Bam. Bam. The proof is here. And that's the end of the article. He hit a home run with that because the shelves are full, and a lot of sneakerheads like that. A lot of sneakerheads like that because, like I said earlier on my intro to my followers on IG and Facebook, trying to manually get a shoe is difficult, especially if you don't have any accounts with none of these retailers. You don't have points, you don't have rewards, you don't have a history, you don't have any of that. It's going to be hard for you to shoe a specific shoe. Now, a shoe that nobody wants, you can have at it. You can walk into the mall, walk into any retail store and grab it for a shoe that nobody wants. But a shoe that is coveted or highly coveted, you're not going to be able to get that. And you don't have any connection to any of these retailers, or you don't have any history or anything. You're not going to be able to get it. That's where a person like me comes in, because it's just difficult to manually hit a shoe, and you have to have the time to do that too. You have to have the time to be able to build up these points, have the money to spend to build up these points, build up your rewards history, build up you know your history with the company, with the retailer, going to the store, shop online, trying to find the best price, research, and you know network with different people, get into some of these sneaker groups, whether it's through Discord, Facebook, or wherever. That's a lot of time you have to spend. And, a lot of people don't have that, which is why I'm here providing the service for that, because it's a lot. It's a lot. And, even as a reseller, you know, on a reselling end, I'm not making as much money as, I was before, but, I don't bank on that. I understand. I know what time it is. I know what time it is. And, just like they detailed in this article, shit ain't moving like it used to. It ain't moving like it's used to. And as you can see from from Nike, the top execs on down to the consumer to the reseller, ain't no money being made like that. And you can see it in Nike share price. Let me pull it up. Let me pull it up. You might not get a good visual of it, but let's pull up Nike share price. I'm gonna use Webull to pull this up. And literally, I look at stocks all day, every day. That's where majority of my time is spent when I'm on my phone or on my laptop. I'm looking at stocks. And I already got it up here. And it's on the daily chart. It's on the daily, as you can see. That says Nike. It closed at $107.51. Now look, if you can see, it went from 128.68 to where it is at the end of market close on Friday. That's $21. That is a $21 share drop. $21. That's a lot. That's a lot. Now, and that happened. Okay, it was $128.68 at its high, and that happened on the 1st of May. And it's been trending down ever since, which is why the analyst, Poser, in the article, said his company downgraded it to sell, which clearly hurt Nike to where it's $107 a share. Now let's look at Foot Locker. Now Foot Locker has reported that it's going to be closing stores. Um, but I'll wait till Mo goes live to go into that. Or you know what? No, I'll just go here. I'll go ahead and go and detail it here. Um, let's see. Let's pull up the article. Let's pull up the article on that. All these retailers, are suffering in more ways than one. Okay. Oh, we got CNN right here. And CNN Business, and it says Foot Locker is closing 400 stores. Now, this was reported back in March, on March the 29th. They may become an eyesore. Eyesore. So the last Foot Locker's earnings call, I didn't listen to. But the good thing about it is you can always go back and listen to the earnings call to know what's going on with the company. But I know the previous earnings call, they were talking about opening up more standalone stores. So coming out of malls, and making actual stores, like real estate stores, right? And catering to the customers that way. So let's read the article real quick. And then, I'll give some commentary on it. All right. New York CNN. Two major retail chains are closing roughly 800 stores. One company's spaces likely will be filled, while the others may become empty and unsightly zombie stores. Retailers are already lining up to take over the approximately 400 shuttering Bed Bath and Beyond stores and strip malls. We all know that, where customers can easily park in front. But 400 Foot Locker stores set to close in middle and lower tier regional enclosed malls around the country will stay vacant for much longer, say retail landlords and real estate experts. The diverging outlooks for Foot Locker and Bed Bath and Beyond real estate reflect shopping trends and the troubled state of the retail property market in the United States. The future of these spaces matters because they impact local tax bases, jobs, and the economic conditions of communities across America. Will they get a second life? Who knows? All right. So Foot Locker said earlier this month that it will close nearly 200 stores in Class C and D malls and 200 stores lower performing A and B malls. Malls are unofficially rated within the industry by a letter based on their location, profitability, sales potential, and other benchmarks. For some Foot Locker locations, there is just no solution, said Jeff Kreshik, a senior vice president at retail property owner Federal Realty. The malls just have too much space, and losing yet another staple of the mall will not help. Foot Locker's planned closings will be just the latest blow to U.S. regional malls. Regional malls were built during the second half of the 20th century in an attempt to cater to a growing number of Americans leaving cities for the suburbs. These malls replaced former downtown shopping districts in cities and were often anchored by two department stores at their ends and filled with inline stores between them. Regional malls today are usually considered B or C malls. They tend to have fewer tenants than Class A malls and draw from a smaller surrounding population of shoppers. Many are older and have less natural light and open airspace than their upscale competitors. Mixed-use A malls with grocery stores, luxury retailers, restaurants, gyms, and apartment buildings have been a bright spot in the retail real estate market. They are often walkable outdoors and have a mix of tenants that gets customers to linger for longer, increasing the chances they'll purchase something. But Foot Locker's planned closings will be just the latest blow to U.S. regional malls, which struggled as online shopping took hold and the economic environment around some malls deteriorated. Regional malls have been caught in a spiral as their department store anchors like Sears, Macy's, and JCPenney close. Big issue. Anchor vacancies in malls hurt neighbors like Foot Locker and reduce traffic to their stores as well, which, COVID, escalated a lot of that. And what happened during COVID? A lot of these retailers went to an app-based, mobile-based system, raffle reservations, exclusive access reservations, so forth and so on, where you reserve and do everything through the app. You just pick up and pay in store. All right, so moving along. Eventually, stores like Foot Locker go dark and it becomes harder for the mall to survive. Gap or GPS, we know Gap, Victoria's Secrets, and other brands have closed hundreds of their stores and malls in recent years. The vacancy rate for Class B and C malls during the first quarter of this year was 10.8%, an all-time high, according to real estate data from CoStar Group. That compares to a 6.6% vacancy rate for Class A malls. We're seeing the continued slow death of unperforming malls in areas that are no longer prime shopping corridors, said Brandon Zvek, the National Director of U.S. Retail Analytics at CoStar. Finding tenants for the 400 Foot Locker spaces will be challenging as big retailers look to stay away from weaker malls. It's going to be really hard for these mall owners to attract national brands, Zvek said. There's a reason they're closing or choosing these 400. Now that's the issue. So Foot Locker has Champ Sports now. It used to be Foot Locker's Champ Sports and Foot Action. Then it was Foot Locker, Champ Sports, Foot Action, and they acquired East Bay. and then they had East Bay for a short time, and East Bay went out of business. So now, and then Foot Action went out of business. So now it's Foot Locker and Champ Sports. Now they're going to be closing Champ Sports as well. A lot of Champ Sports stores, along with Foot Locker stores as well. So, and like I said, they want to open more actual real estate retail stores, outside of the mall. That way the customer can experience Foot Locker itself, which is a dope idea, which is what Nike is supposed to be doing. And they have been doing that. They have been doing that slowly but surely. Um, they opened a Nike out here in Houston. Well, it's a suburb north of Houston, in the Woodlands. That was smart for them. Um, we need more Nike stores. We need more Foot Locker stores as well. Actual retail stores, not in the mall, which is cool because people like going to the mall. But if you're not in a hot area or a city where there's a lot of shopping in these malls, then yeah, it can be a problem. And having a retail store, actual retail store for Foot Locker would be beneficial or better than having a dead mall like this article states. So like I know for here in Houston, there's just malls that are garbage now. Uh, Greens Point used to be a popular mall. It's no longer a popular mall, which is why they move Foot Locker out of that mall to another mall down the highway. It you can see this once you get out and you know overlook the city and the area you're in, and you can just see the demand for such things. Certain places are deserts. So you can see why, you know, Foot Locker would be going this way. And I kind of want to go and read and talk about Foot Locker's earnings report. I'm going to do that in a separate video. That's going to be a separate video because it's probably going to be a lot, that I have to write down, jot down notes, and things like that. But so yeah, you know, uh, man, it's plain as day that this economy is crashing, and you may not necessarily feel it in a way that you think it should feel, but it's coming. It's coming for sure. So uh, I just thought, that Nike article and then reading that Foot Locker article, you can just see that, is just tumbling down from the top retailers all the way down. And you know what's funny? You know, the luxury brand retailers are not having this issue. Louis Vuitton, Gucci, Kering, all of these other luxury brands, they really not having this issue. Even the uber wealthy, everybody is getting hit by inflation and economic issues, but you know those companies are staying afloat. Hell, Louis Vuitton, just surpassed Tesla as number one on the most expensive company, or most the richest company. Well, Bernard Arnault surpassed Elon Musk as the richest man in the world, and he owns uh, Louis Vuitton, Moet Hennessy, and so forth and so on. So, man, that's uh, that's crazy. It's crazy, and this is for you know anybody in the sneakerhead culture. I'm going to clip this video. I'm going to cut it. That way, people really understand this, man. Like, it's serious. It's super serious. Not even just as a person who likes sneakers and likes collecting, like financially, this is an issue. The company that are enamored with and love is having issues, is struggling. Yet you have to be able to see that. If you don't, then that's an issue in itself. So, gotta pay attention to that. So I was gonna get into Peloton and some news that they released today. But I'm gonna do that in a separate video as well. Um, I gotta create more content on the finances, economic, and business side as well. So I'm gonna do another video for Peloton, and I'm gonna do another video for Foot Locker and its earnings, and I'm gonna put that out as well. Um, but I'm pretty sure it won't be quite as long as this. I went an hour on this, but that's good. That's good because it's been a minute since I've been live. Um, but yeah, um, that's it on this, man. Also gonna do some more research and probably do like a follow up video about those other sneaker companies that are performing well, that are outperforming Nike. So I'm definitely gonna do my research and look at that, and we're gonna go from there, man. Uh, y'all already know, man. Subscribe to the channel. Follow me on all social medias, man. Uh, Wall Street Logic on Facebook and Instagram. Follow, subscribe here on YouTube at Croft Services. Um, and yeah, man, you know, this is the main course meal right here. When we talk about stocks and investing and finances and economics, sneakers is something else that's like a hobby. It's cool, but this right here, this is the money maker, the primary. You know what I'm saying? So um, I stay locked in on this 24/7. So yeah, man, subscribe, follow, share, comment, like, all of that stuff, and catch y'all later. Maybe when Mo go live, or here in a few hours, I'm gonna put some more content together and go from there. Peace, power, and profit.